The easiest way to claim a tax deduction for your car expenses in Australia is using the cents per kilometre method. If you haven't heard about this method or are not sure of how and when you can claim it, then this video is for you. You could be missing out on hundreds of dollars or even thousands in tax refunds, so make sure you watch the end of the video to maximise your claim within the tax rules set by the ATO. If you use your car for work-related use other than your trip to and from work, it's likely that you can claim your car expenses in Australia. This includes travelling in your car from work to training and development days, attending work conferences, visiting clients or other workplaces, and performing general admin duties like going to the bank or post office or collecting work lunches direct from the office. The cents per kilometre method is designed for taxpayers who infrequently use their car for work purposes and don't keep records of receipts for car expenses or haven't kept a logbook for 12 weeks. So it's a great way to claim a tax deduction if you're not quite prepared, while avoid getting into trouble with the ATO for not keeping all the correct records. The current rate that you can claim personally in the 2022 year is 72 cents per kilometre travelled, and applies to all cars no matter how big or small the engine is. The 72 cents rate is the average amount of all costs to run a car per year, including petrol, maintenance, registration and insurance, among others. You can't add these costs on top of the cents per kilometre deduction, so it is not designed to cover you for the cost of big fuel fluctuations or repairs, so it is not a big tax deduction for high work-related use, but rather a conservative estimate for an average person driving an average vehicle in a normal year. To claim a car deduction using the cents per kilometre method in the 2022 year, you could simply multiply the number of kilometres you travelled by 72 cents up to a maximum of 5,000 kilometres per year. Once you get to 5,000 kilometres, you can't claim any more tax deduction using the cents per kilometre method, which is a big downside if you use a car for work a lot more than this. Also, if your employer reimburses you for car travel costs, then you can't claim a tax deduction for those trips. The ATO could ask you in the event of an audit how you calculated your work-related travel, so it is best to keep a calculation on file just in case. If you do use your own car for work a lot more, or you have expensive driving habits above average, then there is another method that will give you a bigger tax deduction in your tax return, and it's called the actual method. But before I tell you about that method, I'd really appreciate it if you could press the like button to support my channel and also press subscribe to see more videos from me that will help you save money. Thanks a lot. So the actual method is just as the name implies. You can claim what you actually spent on your car during the tax year. So if you have an expensive car or you drive lots of kilometers for work or both, then this method is best for you to maximize your income tax refund. To calculate your refund using the actual method, you need to total all expenses that you spent in the year on your own car. You must own this car in your name. Costs would typically include petrol, insurance, registration, repairs and maintenance, and even interest on any finance to buy the car, and depreciation on the decline in value of the car as it ages. However, you must have receipts for all expenses that you claim as a tax deduction, otherwise you can't claim them, and you may be better off using the cents per kilometre method if your records aren't complete. Once you total your actual expenses, you then simply multiply the total cost you spent by your business use percentage. What is your business use percentage? Well, that's the hard part. You need to keep a logbook of all your business travel for a period of time. A logbook is a written journal that you need to keep that shows your opening and closing odometers for every trip in your car, with kilometers traveled identified between business and personal use. You need to log an entry every time you use your car for exactly 12 weeks, which is close to 3 months. Once done, your total business and personal kilometers can be added up, and then you divide your business kilometers by your total kilometers from that entire 12-week period. So essentially, you're only claiming a tax deduction for the business portion of your expenses and not your personal ones. Remember, you can choose to create a logbook at any point in the year, so it's best to pick a busy time of the year and not a time that you'll be on holidays like Christmas or summer holiday periods when you do more personal driving than usual. This will ensure you maximize your business use percentage. For example, Joe traveled 1,000 kilometers in a 12-week period and traveled 850 kilometers for work-related activity. His business use percentage would be 85%, which is 850 kilometers divided by 1,000 kilometers in total. This means he can claim 85% of his car running and ownership costs. Also, as with the cents per kilometer method, a business trip does not include home to work or work to home, as that is still considered private with this method, even if you live far away from work. The good news is your logbook stays valid for at least 5 years, unless your conditions significantly change, like you change jobs, or moving home, which means you need to create a new logbook for another 12-week period. This actual method requires much more admin time on your part and can be challenging to keep your records and receipts accurately. However, it is definitely worth it if you use your car for work a lot. If you do get a very large tax deduction for using your car for work, or any other tax deductions for that matter, there is a way to receive your tax deduction benefits earlier by completing a PAYG withholding variation form with your employer, and the video on the screen explains why in more detail. If you do complete a PAYG in variation form, then you won't need to wait until the end of the tax year to get your tax refund from work-related car tax deductions when you lodge your income tax return, which is great for your cash flow. See you in the next one.